Hey guys, this is Gabby from The Savvy Professor. In today's video, I will discuss the differences between FHA and conventional loans. Watch till the end to know the final verdict on how they compare. But first, let's start with the differences. So the main difference between them is mortgage properties. With FHA and conventional loans being types of mortgages, they can finance different properties. With FHAs, you can only receive financial aid for your primary residence, which is the main home you live and dwell in. It is usually a single house. On the other hand, conventional loans can finance an array of properties, including your primary residence, vacation home, and even rental spaces. Conventional loans therefore have more property options. Qualification standards. When it comes to eligibility requirements, FHAs do not need a high credit score of more than 580. Additionally, you can get one with debt-to-income ratio of 50% or less. You also must be able to make a down payment of 3.5% of your mortgage loan, making it an option for low to middle class earners. In contrast, conventional loans need a credit score of at least 620, a down payment of 3% to 20%, and a debt-to-income ratio of 36% or less. FHs therefore have less restrictive qualification standards. Mortgage insurance. Depending on your mortgage terms, you may have to pay for mortgage insurance to protect the lender from defaulted payments. FHA borrowers must pay mandatory insurance in the form of premiums, regardless of their down payment for the entire duration of their mortgages. Conventional loan takers, however, are obligated to have private mortgage insurance, PMI, if their down payment is less than 20%. The insurance is more flexible since you can request cancellation once your loan balance falls under 80%. Conventional loans therefore have more favorable mortgage insurance terms. But do they have any similarities? Yes, they do. They both offer mortgage refinancing, so you can get better mortgage conditions with a different principal amount and interest rate. Additionally, FHAs and conventional loans are subject to tax, which should be factored in when taking either. To sum up, how do they compare, FHA or conventional loans? When I got my current townhouse by FHA mortgage, what shocked and excited me the most was how flexible its lending requirements were, since at the time I had a less than average credit score. To date, as I pay the loan back, I appreciate how refinancing the mortgage is easy and hassle-free. But when I decided to get my vacation home in upstate New York, a conventional mortgage came through because it didn't have strict property standards. Despite it being harder to qualify for, I love that I can have the loans PMI canceled soon, which will greatly reduce my payments. For these reasons, I pick a conventional loan over an FHA. Thanks for watching.